Hello, everyone. This is Terry with Futures.io, and as always, I would like to thank you for joining us today. It is my pleasure to welcome Bruce Pringle from Bookmap for today's webinar, Understanding Order Flow, Stop Runs, and Icebergs. Throughout the webinar, if you have a question, please feel free to type it into the questions box. We'll do our best to answer them at the end of the event. This webinar will be recorded and posted on the Futures.io website within 24 to 48 hours. If you're watching this afterwards on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, comment, subscribe to our channel. It really helps us a lot. We're trading news, events, and information. Follow us on Facebook, YouTube, and Twitter using @Futures.io. Also, please bear with us. Due to the COVID-19 pandemic, most of us are working from home, so you may hear children or animals in the background. And now, without further delay, I will hand it over to Bruce, and you'll get the pop-up to share your screen again. All right, she's all yours.
Okay, great. All right, so well, thanks, Terry. Pleasure to be here. And well, we're going to go through a Bookmap, but we've developed something very interesting and unique here. And as many of you might know, what Bookmap is showing you in its platform is order flow, and a lot of transparency in that order flow. However, now we're going to be able to understand the stop runs and the iceberg orders within the order flow. So the risk disclaimer: trading futures, equities, and digital currencies involves substantial risk of loss, is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, a little bit about me, a trader of 10 years. My name is Bruce, and a variety of markets, order flow specialist here at Bookmap, and I lead the trader education with expertise in order flow and market microstructure. The Twitter handle for us is @bookmap_pro. You can also find us on YouTube if you search for Bookmap, and you can reach out to us at email at support@bookmap.com if you have any questions. All right, and a little bit about Bookmap. Not sure how many people are familiar with Bookmap and what exactly it is, so I need to do a quick review here. What it is. We're a trading platform, standalone trading platform that's accurately showing, very precisely showing all of the market liquidity, trading events, the order book, both the historical and current order book, that allows you to identify market trends, hidden price patterns, etc. Full transparency with all the market actions here. We have the evolution of the order flow over time. And shows all of the changes in the market liquidity. And what's key here as well is that this is non-aggregated data. Okay, we're seeing everything here, and we're just visualizing it in a unique way. In fact, I'm going to jump into the live market here, or no, actually, this is a replay. This is today's action, and I just want to go through. So those of you who are not familiar with Bookmap, and just define what it is. Okay, this is the Stop Iceberg tracker in this sub panel here. I'm going to go over that, but right now I'm just going to close it up. Okay, we're looking at the S&P E-mini here, there's only 3 elements on this Bookmap chart. Now, for those of you who are new, you're going to look at this and think that this looks rather chaotic. There's a lot going on here. It's quite the opposite. It's very simple data. It's very straightforward. There's only 3 elements here, and let me take all of them off to begin with. Best bid and offer, the heat map here, and the volume dots. Okay, so we have a blank chart. Okay, we have these columns over here that's showing the current market. All right, everything to the right of this vertical white line here is going to be the current market, and everything to the left is the historical. Now, let's just show best bid and offer. That's the first element here. Okay, so simplistic. There's no aggregated data here. Okay, we're not looking at a bar of data that is aggregated within a certain period, which might be a time period of 5 minutes or half an hour. It might be a volume period. Could even be a range bar period. It doesn't matter. Some sort of condition is met. All of the data within that condition is going to be locked within that period of aggregation, and it will move on to the next bar. Here, instead, we're looking at all of the price action. There is no time frame here. It's everything. You're looking at the quickness, the speed of moves and drops or rises. You're looking at areas of consolidation, even microstructure. You can zoom into little areas and see like these little pockets. They have significance. Like this one here, for example, came down bottom of this little range. It went back and forth for a little bit, and dropped again. This is where it broke down. Look at the retest right here. A lot of times in your aggregation, you are not going to be able to see some of these nuances and details just in best bid and offer. Okay, so now let's add the next element, the second element, volume. Okay, these are the volume dots. This is the aggressor volume, market, buy, and sell orders. Green dots are market buy orders, okay, lifting the offer. Red dots are market sell orders, hitting the bid. That's it, okay? Now, what we're able to understand is not only the structure that is made by the best bid and offer, like we talked about this consolidation period, little breakdown right here, retest and breakdown, okay? But the volume within it, okay, which gives us a lot of insight. Who's in control in this area here was pretty clear, sellers, okay? Look at the buying that comes in here, not too much, okay? Look at sellers come right back in, a little bit of back and forth here, but sellers win the battle. Consolidation here, sellers again here, here, and here. It looks inevitable for a breakdown, and indeed it does occur into the close today in the S&P. So understanding volume and structure is rather essential. However, what about the order book? What about the auction? Where are they bidding? Where are they offering? None of that is here. And typically, we get that information from our DOM, our depth of market. The problem with that is in the DOM, the numbers here, the COB column, which stands for current order book, the numbers are always changing. Okay, so you don't get to see what was there before. All we do in Bookmap is we take the data and we transform it into a heat map. Okay, so look at the orders here. These are on the bid here. They were there all day down at this 30 level, and it transacted right into it and through it. Okay, this is higher time frame order flow. This you're not able to do in your DOM. You're not able to see the higher time frame. You're not able to see, look at how the nuances in here, they're adding more into it in the heat map. The scale is red, orange, very high liquidity, and then yellow, white, blue, and then black. Okay, so just 3 elements, okay, but it's really truly all of the market data here, all right? Let's move on. That's just an introduction here to Bookmap, and let's go to the presentation. Okay, now what we're going to do today is we're going to understand the order flow, but the stops, the stop runs, and the icebergs, the order types within the order flow. This is unique. This is a new level of transparency we did not have access to. This is with market by order data, and we'll get into all the definitions in just a moment. In today's agenda, though, we're going to look right away at the advantage of accessing stop and iceberg order transactions, okay, and how it can help us. And in fact, let's just jump right in immediately and take a look at that. I've got a slide here. Right here, this is today's S&P E-mini, okay? We're using this the sum accumulation for this Iceberg Detector. But look at the market here. At the cash open, 930, rise to the upside. Look at the move down, okay? Low of the day here, 30.30, which we saw transact later in the session and through it. They're absorbing in here, okay? They're staying in the order book. These limit buy orders on the bid here are getting filled here. They completely absorbed all the selling pressure in here. They did not trade through 30.30, and we got a bounce. But now, and this is all good information, okay? The sellers were not able to trade through this area here, but this is our Iceberg detector right here. Look at the spike in Iceberg orders right at this area here at around 30.31, okay? A massive spike, okay? It was like 500 or 600 or something like that. Iceberg orders in here, these are larger players using hidden orders, Iceberg orders, absorbing the selling pressure into this area here, okay? And if you can understand and put together the structure, okay, the auction, understanding where they're bidding and offering, okay, and then start to understand the order types at these areas like icebergs, okay? This was a quick, like, you know, what, 10-point move on up to 30.40, top of the range. You can exit, you can see stop runs to the top side here. Anyway, I wanted to show a quick example here, and we'll go through the details here. but this is really giving another level of transparency. All right, so let's move on. What is MBO data? Hey, you might not have heard the term before. Market by order data is a data format provided by the CME only at the moment, which includes order by order full depth of market. Okay, it means all levels are live in the order book, right? And you might not have had access to that before. This format allows tracking orders throughout the entire lifetime. So for example, from the moment a limit order is submitted or modified or eventually executed or canceled, it can all be tracked, right? This allows us to develop more advanced and truly real order flow analysis in real time. Okay, now compare that to what we've been accessing before market by order data. And the CME released it about 3 years ago. Anyway, market by price is the way we've been accessing it before. It is only giving you 10 levels on the bid and 10 levels on the offer. That's it, okay? You don't get all levels of price and updates for those levels. There's also the position in queue. You do not get the position in queue. I forgot to mention it in the MBO data here. You can also see the position in queue, and that's in fact what the CME is advertising. But understanding the complete flow here is a lot more insightful than just position in queue. Okay, so anyway, you're not able to see any of that. You're just able to see the quantity of the number of orders in the order book, okay? Not the specific order types, etc. Anyway, that's the difference. That's what market by order data is. That's what market by price is that we were having access to before. Okay, so what does this new SI tracker display? Okay, it's really simple. It's for the CME, stop order transactions. Also from the CME, native Iceberg order transactions. Okay, and the context between stops, stop runs, and Iceberg orders. And don't worry, we'll go through several examples here. And we'll look at today's action as well as some other slides. Okay, now note, this is no holy grail in terms of like, this is no signal service. It's just showing this, stop order transactions, Iceberg order transactions. Okay, it must be used in the context of the market structure and the order flow, and we'll go through several examples. Okay, and what kind of clarity and transparency this offers is a simple analogy here. Let's suppose that you witnessed a crime, a bank robbery, okay? And a red car pulls up in front of the bank and 3 people get into the car and drive off. And an officer comes by and says, well, what did you see? Can you give me a description? So yeah, you know, I saw a red sedan, 4-door car pull up and 3 guys jumped in and took off, okay? Well, that's not bad, but with market by order data, you're able to tell so much more with the order type. You're able to tell what kind of car it was. You would say that was a red Ford Fusion. Okay, you would be able to give the license plate number. You would be able to identify the height, weight, etc. of the 3 different criminals getting into the car and driving away. So you're really able to get into the details here, right? And what's interesting about this is the accuracy and the precision. So this is with 100% accuracy, okay? And we have FAQs to go through if you have questions about that accuracy. All right, anyway, why is this important? Okay, why do we want to see stop orders? Okay. Well, what are stop orders? Well, it's an order type that it's lying in the market. It is not in the order book, okay? And once a transaction occurs at that price level, then it ignites that order and it turns it into a market buy or market sell or a limit buy or limit sell. But we're going to be talking about stop loss orders here. And there's a distinction, okay, because we're going to be looking at stop runs. That's it. That's as simple as it gets. And the advantage to using or why people use the stop loss orders is to exit the market typically. Now they may be using it to get into the market as well, but there's slippages involved, etc. So most of the time, typically, they're smaller players and they're using these stop loss orders to protect themselves from losses. Okay, so they can exit the market and not have a huge loss go against them, right? So that's what stops are. Now, stop runs are when several of these stop loss orders are triggered one after another. And now you know where these stops are, okay? Now, not the orders, but the transactions, okay? Once they transact, you're able to know that. This is invaluable information within that context of the order flow and market microstructure or market structure that we just talked about, okay? And we'll go through examples yet again. Iceberg orders, okay? Why are they important? Larger players are using iceberg orders. They want to hide their size from the order book. They do not want to show their hand. They don't want to show the number or size of the orders that they are holding, okay? And larger players are moving the market. We want to get insight to their actions. There's a cost involved as well for using hidden order type from the CME. And a larger player will pay that cost because it gives them an edge. Again, invaluable information within the context of the order flow and market structure. All right. There's some details about the icebergs. I might just kind of breeze through this, but I do want to mention there are two different types of iceberg transactions. And Bookmap Global Plus, before this Stop Iceberg tracker, we already have two different other types of algos that can detect iceberg orders. However, these are synthetic or heuristic. Okay, so it's identifying the algos that are using iceberg orders. These aren't the native iceberg orders held by the exchange. Okay, these work on all exchanges and from all data providers. Okay, now the native icebergs that the Stop Iceberg tracker displays in Bookmap are hidden order types used by the exchange. Okay, they are co-located at the exchange, and there's a cost to use these. And then Bookmap's SI tracker displays the native iceberg transactions with 100% accuracy. This is only for CME market by order data. Okay, so big distinction between the two. All right, now let's just go through exactly what this is showing here with stops in Bookmap. Right now, here's a quick, a very simple image of what's going on. Right, the red line here is the best ask in Bookmap, and the green line is the best bid. We already showed that. Now, in the subchart is we just have the stops being displayed here. Okay, well, these market buy orders here, lifting the offer, are identified as stops. Okay? And we know this, right? So likely it's likely not someone getting out of the or getting into the market, likely someone getting out of the market, and one triggers the next to the next level and to the next level, and you get a stop run. Okay, so when we start to detect stops, okay, you'll see them rise here in the y-axis in the stop indicator. Okay, and that's it. Right now, icebergs are a bit different. Okay, these aren't aggressive orders. These are acting like limit orders, passive orders. Okay? And well, here you can see market buy orders hitting or lifting the offer here. Okay, but on the other side here, we have iceberg orders, and they're short. Okay, so they're over here absorbing this buying pressure in here. Okay, and you can see the drop here. So from it's about 100 iceberg orders in this little area right here, and we're down at, like, you know, looking at millisecond levels here. Anyway, very simple output, identifying the icebergs. Right now, let's take a look at an example in the S&P. Okay, and put both of them together. Right, and this was yesterday's action, in fact. So we have a move to the downside, 10:30, 11 o'clock here, and then look at this very, very quick move. Okay, it probably stopped a lot of people out of the market. It went down below this swing here, okay, and where the buyers started to come in right here at this level, around 29.75 or so, just spiked below it here. Well, what's going on in that area, right? Well, we can see, tons of icebergs here. A big spike in the blue line here, which are icebergs, and we have and they're buyers because it went up. So we know that they're buying icebergs, absorbing on the other side. And in the same moment, we have the stop detector here showing us that stops are being triggered on the way down. So we have, now we know that most likely these are stop losses of smaller traders exiting the market very, very quickly. And then on the other side, though, we have larger players in the context of them absorbing the selling pressure right into that area. And what was the result from that? Okay, down below the swing, comes right back up to the top here, and then it grinded higher the rest of the day here. Okay, now again, knowing the structure here, but then knowing the order types within this structure is invaluable. Okay, it's not some sort of red light, green light signal here. You need to understand the order flow. Okay? You need to understand what's going on in some of these areas here, and then where do you want to play this? Back up to maybe exit on a stop run to the upside. Okay, or here's a great area up here, and it's above the range here. Okay, so right into high liquidity up here at this level, which is 30.30 of all places from yesterday. Okay, so important level last couple of days. All right, here's another example. The other day, 19th of May, the move down here at S&P E-mini through some of these areas, and then look at the stops. Okay, right in here below the swing, into liquidity in this area here. Lots of stops being transacted. Look who's starting to absorb on the other side. Okay, we have that context again of structure and order flow. Okay, with limit orders here, and we have icebergs on the other side absorbing, buying, right into the stops. Okay, or the stops are selling right into the icebergs, and we have a nice move back up to the upside here. Okay, crude oil, great example here. Now, I need to go through this. There's a few different settings in this Iceberg Detector, Stop Iceberg Tracker. Right, there's a sum accumulation here, which I've been showing, and then the next one here is a reset. Okay, so you see the spikes in stops and icebergs, and then it will reset back to zero based on a certain inputted time of your choice. Okay, so what do we have here in crude? Okay, high liquidity in here, not only filled, it trades right through it. Okay, back into this lower level here around 32.25, trades into that level here, and then look at the icebergs and look at the stops. Okay, again, that context. Okay, really great example here, right? So right into high liquidity as well. So you've got the order flow, you've got that structure in the order flow. Now it goes sideways for a bit, okay? But all of the buying that is in this area in here, I mean, we're seeing some stops in here. We're seeing plenty of icebergs though. Again, buying in this little area here, right in here, okay? We'd be looking for the move higher back up into either where it dropped from here or the swing up here, or maybe you're looking for, if you're holding for a longer time frame, back up to the swing of the day here, or a swing of this period at least. And that's a dollar move in crude right there. Okay, beautiful stop run right here as well, as you can see, triggered right above the swing here. You've probably heard in the past that a lot of the stops are above the swings, significant swings here. Well, here's the proof to that that saying. Okay, so you can start to really piece together some of the details here, knowing the order types within the market order flow. Okay, another one with gold, and yeah, we can see the this is an interesting one here in gold. There's this kind of reversal pattern beforehand, but then the buyers come in. Okay, we get a move back down here, and then look at the absorption, or look at the accumulation, I should say, here. Okay, of icebergs all throughout this area in here, right? And then here's a beautiful stop run right up into high liquidity up here, and then it's up to you how you want to manage it at some of these points. Okay, do you want to hold? Do you want to exit a partial position? Are you looking for it to go into higher liquidity up here, which is exactly what it did later? all right, a little bit later. And beautiful stop run. Are you looking to exit on the stop run and absorption of icebergs on the other side? Okay, so lots of different options. You can scale in, you can scale out, but the reason that you can do this with more confidence now and make better trading decisions is because you not only know the order flow and where they are on the bid and the offer and their behavior, but now you know the order type, okay? Stop losses or iceberg orders, okay? Smaller players getting stopped out, larger players entering in or exiting, all right? Okay, several examples here. You know, we can also just jump in and look at the live market if you like as well. I'm sorry, not the live market, but today's action. So yeah, let's take a quick look here and let's open up the, beautiful move in the close here, this 30-30, which was an important level for the last few days, as you guys can see. Look at the absorption and look at all of the accumulation here of icebergs, okay? And then look at the stops, okay? You know, why wouldn't you think that it's gonna come back up and at least test back up into these ranges here? And now I don't know what happened after 4 o'clock here. I would imagine it probably came up above the swing here. At least this swing, maybe even up to this swing up here. But anyway, look at the bid as well, 30-20, quite a few traders here. I mean, over 2,000 or over 2,200 contracts down here at 30-20, right? So that context again, okay? Understanding what's going on with the order book and the liquidity, and then the order types, and understanding the stops and the icebergs, right? So yeah, we can look at crude oil. We have gold and the NASDAQ as well. Let's take a quick look at crude and see what we had going on today. Oh yeah, this was nice here. Okay, so now again, I'm using the a different reset, and let me show you the settings here actually for this. Okay, so the stop order tracker here. Okay, the color, the reset. I have it on reset as 1 right now. That's the accumulation mode. Okay, and I can sync this or synchronize it all the axes together here. Okay, so we're looking at the same number of stops as icebergs here. A lot of people like this view. We can also look at the accumulation mode, which one is the one that I actually prefer because you can see other contexts that you can't see with this one. Anyway, you can see these spikes, you can see the relationship order per order here, or transaction per transaction. So what do we have in this little area right here? Okay, no question about it being a stop run. Right, big stop run to the upside here. Now on the other side though, okay, and the breakout here, look at them pull. Okay, they did not stay in the book here. Okay? It looks like they stayed a little bit in here. They pulled here on the offer though, and nice a break above that level now. Now what's important to understand is just because there's a stop run doesn't mean that it's just going to reverse and go back the other way. We covered this actually in the webinar today. We have daily webinars for our advanced education. In fact, I can give you a link to that today. I don't know, Terry, if you're able to put that into the chat there. I also put into the handouts folder a document that has the link to the today's advanced live webinar. All right, yeah, we're also noticing this kind of behavior of, well, just because there's a stop run does not mean it's going to reverse here. But if it accepts above higher, okay, and you start to see even maybe more buyers starting to come in here, okay, and you can note that if they're not stops, okay, these are new buyers coming in here. These are not stop loss orders. Okay, these are just market buy orders, new traders coming in, right? And we get the breakout again here and another stop run to the upside. Beautiful move right up into high liquidity up here at 34, the figure. Okay, so understanding not only when they're stops, but when they're not stops. Okay, it gives you another insight here. There's so many ways to start to understand and get meaning and value from this understanding of the different order types at these areas, okay, in that context. Anyway, it accepts higher, we get more buyers, and we go higher. Okay. Now, what if, for example, we went up higher like this, and we came right back down and we found sellers, lots of sellers down here? Okay. Well, we'd be looking for this to drop not only back down to the bottom, yeah, at least down to the bottom of this range. Okay. At least to the bottom of the range, or the point of control of the range, and maybe down further as well. Okay, so let's take a look here. Yeah, it'd be looking for probably around this 3250 area or something like that. Okay, if this did not accept, well, what would that mean? It would mean that all of these buyers here, they're not real buyers, they're just stops. And we find the real sellers on the other side. These are your responsive sellers, okay, in your auction market theory, trading it back down into the range and likely to test the other side of the range, okay, by understanding that these are stops. All right, in fact, that's exactly what we did in today's webinar. I can show you an example of it. Okay. Yeah, it was just after, it was this move up into, yeah, it was this move right after 11. Okay, we called it out, and I'll give you the link here. All right, this was a stop run, pretty sizable stop run. Look on the other side though. Who's on the other side? We have larger players absorbing this right into areas of high liquidity as well, above this range. Okay, well, if we get, and we mentioned it, at this kind of 48.5 area here, we start to find sellers drop it back into the range here, highly likely to at least come back into the most traded levels for this range, okay, and potentially to the other side of the range. Okay, and here's the link. It's in the chat. Looks like Terry put it in for everybody there. Yeah, you'll see it. Oh, I don't know if you did get it. Okay, that's okay. I can put it in here again. Okay, there you go. Yeah, and yeah, go ahead and verify it. I mean, we're looking at this in real time. Okay, and we're putting these pieces together. It's forward-looking education. Okay, this is not hindsight, and you know, any of the members can attest to that. Okay, so understanding that context though is key. Will it break out and continue? Will it not and come back into the range and find sellers to trade to the other side of that range? Right. So a few different things to take a look at there. And let's see. Back to the presentation. Lots of different examples here. We have a professional trader. We have many professional traders also using this indicator. Okay, here's Scott Pulcini. You guys might be familiar with him. He's a pretty heavy Bookmap user, and you know, he was looking at a NASDAQ Emini, right? The move down here. This is a 9:30. He's West Coast time. So here's the move down. Okay, after 9:30. Look, he noticed here the icebergs on one side. He noticed the stops here on the other side here, and then he's looking for this move back up to the upside here. Okay, so he tweeted this out in real time. Here's another example looking at the euro, the 6E. This is actually another accumulation mode using exponential that's in the settings. Just means that it will decay over time and return back to zero on the reset. Beautiful move again, stops triggered, and then icebergs on the other side here. Now, these are buy icebergs though, okay? This was the euro. The euro went, just rocketed today to the upside. Well, he was long here. He was looking at this and gaining insight that this is accepting higher because we have not only stops, but so what? Now we have icebergs on the other side. They're buying, they're absorbing on the bid. Okay, soybeans as well. Beautiful spike in icebergs here. That is succeeding the drop here in the stop losses beforehand. Okay, so after that, then you get the icebergs looking for a nice move back up. Okay. All right, let's just go over this quickly here about what is required here, all right, for this. Well, first thing you need to get is you need to get Bookmap, okay? The subscription to either Global or Global Plus, is required that works for both. You need version 7.1 though or greater, right? So that's step number one. Okay. Now, step number two is the a market by order bundle. This is new from Bookmap's Marketplace. Okay, we've opened up our architecture. We have a marketplace where third-party vendors, including ourselves, we can develop various add-on indicators or whatever it might be, automated trading strategies, and you can sell them in the marketplace. Okay, this would be akin to something like you know, all the different coding or different indicators that you have for NinjaTrader, for example. Okay, they have a very, very robust marketplace. All right, so and let me show you where that is here, and just get to the link. Okay, so first off, okay, what you need is Bookmap, and I put the link in there. You'll just go to the pricing section here on Bookmap, and then either Global or Global Plus for the month, or for the year, or lifetime if you want. But at minimum, this one, and then you can also works great with Global Plus, doesn't matter. All right. Secondly, this is the Bookmap Marketplace here. Okay, and then this is the one you want here, is the MBO bundle. There's actually 3 indicators that come with this. Okay, the Stop Iceberg tracker that we've been covering. There's also a liquidity tracker right here. It also includes that, and it also includes this customizable advanced time and sales. Okay, so it's all with MBO data. Okay, now this MBO data though is very particular. Okay, it is only with Rhythmic. Okay, I put the link in here as well. It's in that handouts. All the links are in the handout document that you have there. And here, if you're interested in Rhythmic data, you can contact them here. There's a 14-day free trial. And then there's all the different brokers here that use Rhythmic as well. Okay, so that's what you need here to get back here to the slide. Okay, so you need Bookmap 7.1, Global or Global Plus. You need to get the MBO bundle here add-on, and then you need Rhythmic data. Now, the Rhythmic data, there's one more thing that you basically need. It's only CME right now, but that includes CBOT, COMEX, and NYMEX. Okay, but it has to be Rhythmic data, right? So only the CME is offering this market by order data at this time. All right, so that's the combination that is required there. All right. Okay, and any questions?
Let's see. Can the colors be adjusted, especially for those that are colorblind?
Yeah, absolutely. No problem there. You can any color of the rainbow here. So under colors and settings.
Okay.
Well, I can go through plenty more examples here as well.
Let me, so I'm trying to phrase some of this. On the bottom right screen, what does the numbers for the icebergs and stops represent?
Yeah, this is the last reading here. Okay, this is our little widget panel here, and it's just showing the last, and this is the summation view that we're looking at here, which kind of works like a cumulative volume delta in just the concept only though. Okay, so for example, it will just continue to add icebergs on top of icebergs here. Okay, if it's a sell, it's a negative number, and then it subtracts it. Okay, if it's a buy, then it adds to it. Okay, so there's a big spike here, and then there weren't too many sells, right? So it just hovered up here for a while. Now, even this example right here, I mean, we saw this during the webinar, okay, and we covered this. It's like, you know, we're getting insight from this. We saw this, you know, 11:30, a significant move to the upside. Okay, this was at the, now this is important to understand as well. You know, what we're looking at here is the European close at 11:30 here. Okay, so understanding also the stops and icebergs within the timing, specific timing, to understand that this is the European close, And be careful at the close. There's a lot of erratic behavior by larger players. Okay, what happens after though? We can get a lot of insight. And what does happen after? Okay, well, stops start to trickle to the upside here, but look at the accumulation. Okay, through this area here on the iceberg. Okay, on the icebergs. So what are we looking for? Right? Are we going to break this? Yes, we're looking for this area here, and we're looking for this area up here at 30.55 to transact. Okay, and does one kind of quick move to the downside? And again, who's on the other side here? Massive spike, about 800 looks like here in terms of icebergs. Okay, they're buying. Okay, as we're getting stopped out below these levels, our retail traders getting stopped out below these levels. On the other side here, we have the larger players getting as much as they can. Okay, and then a beautiful stop run right up into this higher liquidity up in here around 30.60. Okay, so not only is it the areas of spikes that give insight, but the accumulation over time. And where there's not a spike, you can also understand that within that area, those are real buy orders. They're not stops being triggered.
Okay. Do you have any more to the presentation, or because there's still quite a few questions?
Okay. Let's see here. Well, it's just there's just one example after another, really. You know, and then following this in real time, though, I mean, I would really encourage you to watch the webinar here from today. Okay, you have the link in the handouts. I mean, this is where we go through it in real time, right? So you can precisely see, you know, how we're reading this, how we're integrating that within the order flow, and how we're starting to understand. At these specific levels in the order flow, we're getting a lot more insight due to the understanding of the order types at those levels in the order flow. Okay, so that's really the key here. And understand though that, you know, because as soon as we release this, a lot of traders are looking at this and saying like, wow, okay, here's your stop run. I'm going to short it and look for the move back down below the range here. Okay, well, it doesn't work like that. It's all about the context here, but you're gaining the insight here. Okay, is there anyone, like for example, look at how this is flatlined here. Okay, is there anyone on the other side absorbing this? No, these are just stops being triggered. Okay, in fact, like we're just showing here, look at the accumulation. Okay, on the icebergs, they're buying here. They're not shorting it, looking for a move back down. Okay, so looking for this to go higher, looking for this to stop run and accept higher and continue to go up into higher liquidity. Okay, and then at this upper level up here, well, what do we see? You know, actually kind of convoluted here. It's really kind of going back and forth here. Okay, and then stops being triggered here on some of these areas here. Yeah, why don't you go ahead, Harry? Any more questions?
All right, let's see. How can you see if an iceberg is buying? Can you also detect the volume of an iceberg?
Yeah, absolutely. We know precisely the volume of the transaction. Okay. Now, I mean, I don't know how far back I should go to define what an iceberg is or exactly how it's working, but only the tip of the iceberg, okay, a portion of it is released to the market. Okay, and with the native icebergs, that piece is sent to the market. It transacts. We identify it as iceberg. When the next one comes in, we know that the next piece of that iceberg comes in. We know that that's an iceberg, and we know the volume as well. Okay, and we're very precisely outputting it here. Okay, so if you want the numbers, in fact, we can just zoom into these areas here, and then you can look at the spike here, right? And the down in the lower left-hand corner. Okay, here we go. Like you can see that it gives the date, the time, and the iceberg orders here. We have 2518. Okay, you see 25 right here, 2500. Here's 2000 down here. Okay, and then at the lower area down here, we're looking at about 1900. Okay, so so we have about 600 icebergs here. Okay? And every time that it transacts, we know. All right. Anyway, yeah. Any other questions there, Terry?
Is the MBO indicator available in a free trial?
No, there's no trial of it. In fact, yeah, like I said, this is all new on our Bookmap Marketplace, which is here. Okay. In fact, let's just go right to the marketplace. Okay, and you'll see like there's other traders. You know, here Keltner channel indicator by Zoll Store or Zoli. Then you know, we have the these by Bookmap here. We have XTRD add-ons here. We have a professional Bookmap trader here, Walter, trading to win, and you know, releasing his own indicator, etc. Okay, so if you want to code and write your own indicators, the architecture is open here, right? And the Iceberg or the MBO bundle is right here. Click on this. Okay, it's $89 a month. It's actually half off right now. Okay, to the end of June. Okay, we extended this to the end of June so that everyone has plenty of time here to check this out if they're interested. Okay, now again, like the level of transparency here, I mean, you know, to understand exactly what's going on in these areas, we didn't know that before. Okay, market by price was not giving us any of this information here. Okay, but now we know exactly what's transacting in some of these areas here in terms of icebergs and in terms of stops. Okay, stop run right up into high liquidity up here, and yeah, and some absorption along the way here. So looking forward to come back up a little bit here. We get the move back up into 64. Okay, and then big stop run down here as we continue on lower. Now they're absorbing on the other side here, and we get a move back up into the area here. Okay, just understanding these details here at these specific price levels, and understanding that went down below the range and what transacted down below this range. Now, you can see the nuances also in the range here. Okay, but I would encourage you to come to the webinars. There's the advanced webinar that is free on Friday. In fact, I can put that link in here for you as well. Okay, and if you want to see us do this in real time, that'll be tomorrow. It's always free on Friday. Okay, and here's the link for that. Okay, and we'll go through it in real time. Okay, and really get into the nuances and understand the advantage that we're seeing at some of these levels here, or the edge.
Okay.
Okay. Yeah.
Sorry,
Go
there's
ahead.
one I see just right now that sticks out to me. It says this is more for Bookmap in general and not for the Stops/Ice. Do you have plans to add more indicator panels? The only one is very limited now after all these goodies on the marketplace.
Yeah, that's a good question. We've talked about it, but you know, we're just starting to get into opening up the indicator panel here, but not at the moment. But we've talked about it in the future, and I don't know any plans. I don't have any further notice or information on that.
Okay.
Okay, let's see if any other questions, yeah, any particular markets anyone wants to take a look at here. Take a look at gold. Actually, we rolled over to gold August here. Again, just beautiful moves here. And look at the absorption. Look at the stop runs on the way down. you know, just into high liquidity, continues to sell off into high liquidity here. They're still, I mean, see how they're going together here, right? Stops along with selling icebergs. Okay, they're on the offer, pushing this market down into low. Looking, where would you be looking for it to go? Levels of high liquidity. Okay, beautiful stop run right below this range here, which is probably the 1725. You know, it dumps through that area here. And we don't really see too much. This is just, we don't see, there's still, you know, icebergs are still kind of sell side here until we get back up into this area here. So they're looking at, you know, above this little area here and at the close here, basically, or at 4 o'clock p.m. and then move back up into the range here. All right, so that's that. Let's see here. We can take a look at the 6E. 6E today, like I was telling you, what Scott was looking at earlier. I think he was looking around. Oh, he was earlier. He was 9:30, I think. Well, anyway, I mean, you can see the massive move here to the upside. Here again, like just, you know, icebergs and stops actually flowing together on the way up, right? It's not one side on the other absorbing from the pressure. In fact, they're adding into it, as you can see, and continue to accumulate in these areas here. I mean, what more do you want? I mean, like here they are accumulating here, and then stops being triggered on the way up. Okay, and they're still accumulating all the way up. Right? So it's the context again of a trend here, along with stops and icebergs. Okay, and then a nice stop run here. Now here's where the distinction lies. Okay, on this double top pattern up here. Okay, here now they're on the other side. Right, and then we see stop run up through that area, but they're on the other side absorbing. Okay, and it, you know, clearly seen here. Okay, and then nice drop lower here. Okay, looking for at least bottom of the range here, and then that's where they actually start to accumulate more on the other side at the bottom of the range here, right around this 110.79. All right. And what about NASDAQ here? Take a look at the NASDAQ. It's been pretty low liquidity in the NASDAQ and the YM these days. Okay. And, you know, one of the things to understand here as well is that this is working on high time frames and low time frames. I mean, the numbers are here. In fact, let's take this one here and switch this over into a different mode. Okay, the 3 different modes here, we're looking at the summation here, like cumulative volume delta. Just positive value is you know, like let's say a buy stop, and then a negative value, you know, a sell stop. Add those 2 together, and then you would get your output. Okay. Now we can let's turn this into reset mode though. And what we're going to do is use 1 minute. Now you can use 1 minute, 3 minutes, up to 30 minutes here. Okay. We're going to use 1 minute. Okay. Now we're going to do the same here for the accumulation mode for icebergs. Okay. Reset mode. Okay. 1 minute. Now what we can do here, see how the axes are still not aligned though, right? They're separate here. So what we're going to do is we're going to sync them here. Okay. And then this will sync them, and it redraws the indicator here. Okay, now you can see 100 here matches with 100, or 200 here matches with 200 on the icebergs. Okay, so stops and icebergs, you're looking at precisely the same numbers here. Now, if you also want them to sync around a or symmetrical around the 0 line, then check these 2 boxes here. Okay, and you'll get it here. All right, so what beautiful move here in crude. We saw it earlier. We covered it, the stop run to the upside here. Yeah, and then icebergs over on the other side up here, up into this area here, which ultimately, we can see the reversal happen in the stop run to the downside over here, bottom of the range. Again, right into where? Like the same area where it broke out from, right? So market structure, again, is key, but now we're starting to understand the order types within that structure, okay? And that's a level of transparency that is rather unique. I have never seen anything like it. All right. So, and any other questions, Terry?
All right, let's see.
Can also go through some of the links here from the. Here's the document that I was mentioning to you guys. Okay, this has all the resources here. So the pricing, the bundle, the rhythmic futures data here. This is what I want to cover as well. If you guys want more insight to this, okay, this is really truly, this is the next level of transparency. And we'll all be looking at this sometime in the future. Okay? It just depends on how people start to accept this here. But here's the market by order data here from the CME group. This has been up for like 3 years. Okay? If you want to understand what it is, you can read about it here. Understand the level of transparency. Increased transparency is one of the benefits immediately they offer here. Yeah, this is a pretty objective information. Okay. Now we also have a blog here, and we wrote an article that goes through all the details here. Okay. And you can read about it here, right? The advantages, the MBO, the introduction here, what it's showing, the different settings, all the different settings are all defined in this article on our blog. And then we go through these examples of explaining it on low time frames, okay, just binary examples, and then moving up to high time frames and understanding the context here, and understanding the edge and insight that you're going to get at some of these areas here. All right. Yeah, we went through pricing. We went through the marketplace here. Let's see, there was something else I wanted to show. Oh, our glossary too. This is really important because in our glossary, we're getting very specific with terminology now. Okay, so we really need to understand what some of these terms mean. If we're going to start to talk about market by price or market by order, we really need to understand it. Okay, or if we're talking about iceberg orders or stops, exactly what is a stop order? A lot of traders are a little fuzzy on some of the details, okay? And we need to understand that. We need to understand who's using that type of order, and then we can put that together in the order flow and start to understand the specific players in the order flow using those orders. Okay, well that's pretty much everything I have.
Okay, there's a couple questions I'll get to real quick. What coding language integrates the easiest? C, C++, Python?
Yeah, the API in Bookmap is Java based, and it's here again. Like I can show you where to find information on that if you go to bookmap.com. Okay, and you click on the More button here. Okay, it opens up resources, product, and solutions. Under solutions, here's API. Okay, click on that. There's a quant version down here, or solution. Here's our marketplace. We'll click on API. Okay, and I know I have it in the. This is going to our wiki page. We also have it within our knowledge base here. And we can do a search for that. Yeah, so it's Java based. All the information is here, and there's a forum as well that we have. You can get more information as well. Okay. Yeah, and yeah, API modules up here. You can see. Oh yeah, I'm sorry. Here's where the link is as well to the API right here. Okay, so that'll open up the main API window here. And then API modules, there's this understanding the structure here, the key API features, is the simplicity, the Q&A, and then quant solution here. Okay, so we have lots of professional traders already taking advantage of the API. Okay, they're creating, developing their own proprietary automated trading strategies as well as indicators. Okay, and that's exactly what our intent was here with the Bookmap Marketplace, was to open that up for you guys. Okay, so that now you can, where is our marketplace? So that you can code your own, or others can code theirs, and they can you can either purchase, or a lot of them are free as well on here. So you can browse through and start to customize Bookmap to look for the specific things that you want and that help you get an edge.
Okay, there's a question on the MBO bundle special price for June. Are you grandfathered in at that price monthly after June?
You are.
Okay.
No, yeah, you. It is locked in. Okay, so we encourage you, if you want to just give it a try, at least give it a try, and you'll have the option to lock in. But if it will recur monthly, okay, so in July, if it doesn't recur again, then you'll be bumped up to the next price level. All right, so I mean, we've had this actually for like 3 months now at this and you know, at the request of our users to have it at this discount, so people can try it out and see what kind of value it brings them. We've had nothing but you know, accolades for this. Traders can't believe it. They can't believe that they're actually getting this kind of level of transparency from market data. And visualized here in Bookmap, and for them, it almost seems like it's illegal or something.
Okay. Do you need to have the global version to use the MBO bundle?
You can either have global or global plus. It doesn't matter.
Okay.
Right, because the difference here is, and I'll go through it here in the pricing. The difference here is that in the pricing, where is it? Okay, let me just go back to Bookmap here. Okay, global and global plus, the difference here is the add-on indicator package you get with global plus. Okay, we've had this for several years now, right? But now we're moving, and we will still continue to develop for global plus. However, this MBO bundle is a very specific thing. It is now within our Bookmap Marketplace, which is, again, this is for third-party vendors and really opening up Bookmap so traders can look at whatever kind of studies that they want and code their own. And that's the big distinction here. So yeah, global or global plus, you'll just need to go to the marketplace though to get it.
Okay.
Oh, one more thing on the price. Yeah, let's see, if you buy before July 30th, the price will not increase. Okay, so I'm sorry. No, it should be end of June. It is still available at that price, but not July. I'm sorry. So I was wrong on that. And again, like we need to go through the details here. This is only for the CME. Okay, this does not work with stocks. Okay, it's only CME futures, and it's only rhythmic data at the moment. They're the only ones that are providing this kind of quality of data that we can output with market by order. Okay, so CME's had it for like 3 years. Rhythmic has had it since day one from the CME, and then now we have developed these add-on indicators that allow you this level of transparency.
Okay. Oh man, I just lost the question. Can you walk through a trade decision-making process with a tool from the assessment entry to exit using the Bookmap?
Yeah, I mean, that's why I was encouraging you guys to go to the, use this link here and watch today's webinar. We do it in real time, right? So yeah, here's the link. It's in the handouts folder. If you download that document in the handouts folder, the PDF, and click on the link.
Okay.
Yeah. Typically, we look at the S&P E-mini, but we're open to suggestions, as most traders want to look at the S&P E-mini in our advanced webinars. Guys, that's another thing. Like when you subscribe to Bookmap, it comes with education. Education's a big part of it. That's free. That's with it. What it is an educational course, 4 parts, and then we have the advanced webinars. So you can apply what you've learned in the course directly in the live market. We answer your questions, and it's not hindsight. Okay? This is forward-looking. If you just go through the example of watching today, so you have the link for it, and you want to see the insights of where we think price is going to go based on reading the order flow. Okay, and we did it all day today. We looked for moves up, we looked for moves down. We talked about why exactly, just like some of the examples we're going through in this webinar here, looking at some of the order flow, and then getting a massive confluence here with understanding not just the order flow, but the confluence of the order types of stops and icebergs and the specific players within the order flow.
Okay. It says CME is only Global Plus, so how can it work with Global?
No, Global and Global Plus, the only difference is that add-on indicator package that is for Global Plus. So all you need is Bookmap Global, okay? It has nothing to do with CME. We connect to 3 different types of markets. Okay, we connect to futures markets like the CME, we connect to stocks, US equities only for the time being, and then we also connect to cryptocurrency exchanges, a number of them. Let me show you on the website here. Okay, so for example, if we just scroll back up, here's all the different data providers we connect to for futures. For stocks, it's only DX feed, okay, but you can have your data sent to your trade station and Interactive Brokers account, but you're not receiving data from them. And then all the cryptocurrency exchanges here. If you have questions about this, it's best you can either click on the link here, learn more, okay? That'll open up a guide, or from the more button up here, and then connectivity guide here. Okay, and it goes through all the different details here. All right, so what you need again for this specific SI tracker to operate within your Bookmap, you need just Bookmap Global or Global Plus, it doesn't matter, okay? But then you also need Rhythmic data, okay? And it needs to be with CME products.
Okay.
And of course, you need the MBO bundle indicator.
What is the cost for Rhythmic data?
Not sure. You'd have to reach out to them. That's why we put in the link here to please contact Rhythmic. But I will mention this, that within some weeks, we will be offering it for purchase through our website as well. Okay, so you can either get just CME data or the CME bundle, right? Which is going to be great. Let's see here. Oh, actually, I think I do have the prices. $97 or $99 for all exchanges. Okay, that would be the entire bundle. Okay, that would be CME, CBOT, COMEX, and NYMEX. And then it looks like it's $39 for just one single exchange. So, for example, the stock indexes and currency futures, that would be for just CME, and that'd be $39. So that's a nice savings there if you just trade the indexes.
Okay. All right, we're just over an hour, so I'm gonna try to find a last question to wrap it up. Do you have a slide on your slideshow with contact information?
Yeah.
Okay, let's pull that up at the end. So if you're watching later on YouTube, you can contact Bookmap directly.
Yeah, so yeah, right here. Oh, it's on the about. Well, I'll put it into the chat maybe. But like contact information. Here's our Twitter, our YouTube, but our support at bookmap.com. Okay, that's our email. If you have more questions about it, like I said, this article covers it in detail, because we understand there's going to be a lot of questions. This is very specific, okay? But like I said, this is a new level of transparency, okay? And it's very objective information. This is not some sort of mathematical derivative, holy grail type of thing. Just because we, look for, some sort of moving average crossover or something like that, it's not like that at all. What we're showing in that indicator panel, which I kind of cringe to even call it an indicator, it is showing you order types, very, very objective. Okay, it has nothing to do about the, some sort of stochastics or, some sort of relativity or volume or something like that, or derivative of time, price, and volume. It's just showing you simple stuff. Stop orders transacting, iceberg orders transacting, but that context is just golden within the price order flow.
Okay. All right. The last question: can the SI tracker be avoided by large market participants who want to hide their activities? It says, I read that market participants can reroute their orders so they do not show up in the Rhythmic MBO data.
Well, for example, iceberg orders, yeah, then you wouldn't use the hidden order type from the native hidden order type from the CME. Okay, let's go over that slide again here, okay. Iceberg orders, then the trader would be, they would be using synthetic icebergs or heuristic iceberg orders. Okay, it would be an algo, perhaps it's co-located, perhaps it's not at the exchange, but they're not using the hidden order type, the native iceberg order from the CME. Okay, instead they'll have some sort of algo that will just piecemeal out the massive order, send out very quickly. Let's say it's 1,000 S&P contracts, send out 100. Okay, when that transacts, it sends out the next 100. Okay, very quickly. But there's advantages to using the native iceberg orders. Either way, we have iceberg detectors that will show both. So if you want that, you can get that both in the CME. Okay, you have iceberg detector, synthetic iceberg detectors within Global Plus. You would need Bookmap Global Plus for that. Okay, and then you would need the add-on here of the MBO bundle or SI tracker for the native icebergs, and you can compare them, and you'll see that synthetic captures a lot of them as well. However, it's different. Like there's drawbacks to the understanding of the synthetic icebergs. Number one is maybe using a different data provider that has lower quality data. Okay, well, how it hits the order book is going to make a major difference, right? And you might get a lot of false positives. Therefore, that's one of the problems or drawbacks here. Another one is different exchanges. Okay, or the different algos. We're identifying algos here. Here it is from the CME. Okay, we know it. So I would imagine that would be the way to avoid it. However, we have algos that can detect the synthetic icebergs as well.
Okay. All right. Thank you for the webinar and the information and for spending some time with us this evening.
Yeah. Thank you very much, Terry. I hope that was helpful, guys. Like I said, you can give it a try. It will get you access also to our Bookmap education. We'll go through it in real time. We'll go through trade examples. And like I said, it's forward-looking. So that question that we had about going through step by step, that's what we do. Okay, we read the order flow. It's not a trading room. Okay. However, we will go over different trading strategies, but it's not a trading room. Bookmap is not a trading style. Okay, Bookmap is a platform that displays order flow. So the main goal here is to understand order flow and read the order flow correctly. Okay, wrapping a trading a style or method around that is up to the individual trader. Okay, but it is forward-looking. We'll give insight to where we think the price is going to move.
Okay,